Depending what system you're on, you may be caught out later on in retirement when you realise too late that you've been taking the tax relief in your pay packet rather than having 25% extra in your retirement fund. Pensions are hailed as one of the most efficient ways of saving for retirement. That's because here in the UK our contributions are tax free. That means the money you usually pay to the government in income tax is not charged. Not only are the contributions you put into the pension tax free, but hopefully if your pension grows over time, that money is tax free also. Yes, you have to lock it away for a period of time, so other forms of retirement planning or retirement savings can be more flexible, but the tax benefits you get of a pension are hard to beat. For instance, did you know you can pass down any unused pension to future generations completely tax-free outside of inheritance tax? Yes, you'll pay income tax when later on in life you decide to draw the money back out, but that can be done efficiently, and at very least you'll get the 25% tax-free when you take your pension either as a lump sum or split up across multiple years until you've used up 25% of the pot total. So how does it work? Well, there's two ways you get tax relief on your pension contributions. One is called net pay and one is called relief at source. Let's start with net pay because it's the easiest to understand, and this is most common when you have a workplace pension that your work actually provides themselves or is in partnership with somebody, and this is where they take your pension contributions before any deductions of your pay, so any national insurance and tax. Your pension contribution will come out before these are taken or calculated. So whatever's left is taxed at your normal rate and you get that in your pay packet. Now this has advantages and disadvantages. The advantage being you get your tax relief straight away because you pay less tax on your earnings. The disadvantage is that the tax relief isn't going into your pension. This also means if you do not pay tax and you make pension contributions, you're getting no tax relief at all. Relief at source is the complete opposite way around. All your deductions are made, so your national insurance tax, things like that, and then your pension contribution is made after those deductions. Even though it might appear in the same pay slip, it is taken after them things have been taken off. So whatever amount of money goes into your pension, you receive a boost from the government. Basically, they give you the tax back that you've just paid on that earning. Now this only covers basic rate, so 20% is added automatically by your pension provider, but how it actually works is rather than 20% of what you put in being added, 25% of what you put in as a contribution is added back in tax relief. It's a little confusing, but trust me, the math works out. Say you earned £100 and you were taxed 20%, leaving you with £80. If you put that £80 into your pension and the government took the 80 and give you 20% of the £80 contribution, you'd end up with £96 in your pension pot, when really it should be 100. If you took that 80, added 25%, which is 20 quid, that will then give you £100 in your pension pot. A little bit confusing, but just try and wrap your head around the numbers. You're just getting back exactly what they took off in the first place. You should be able to tell what system you're on through your pay slip, it should say, but most commonly you will find this on your pension provider's statement or annual statement, whatever you get or whatever you can find on the website. And when you look at your contributions, you should be able to see all the amounts of money you've put in and where they've come from. If your employer puts in, you'll be able to see those amounts as well, and then you might see something with labelled tax relief. So if you've got a tax relief amount of money going in your account, then your relief at source because tax is being added. If you have no tax relief in there when you look at your contributions, then you're net pay. So why does it matter what system you fall into? Well, that's because of us, and when we decide what amount of money we want to put into a pension, we usually pick a number, £50 a month, £100 a month, whatever it might be for you. Depending what system you're on, you may be caught out later on in retirement when you realise too late that you've been taking the tax relief in your pay packet rather than having 25% extra in your retirement fund. Equally, you could reduce the amount you're putting into your pension pot and allow tax relief to top you up to the amount you actually wanted to put in there to allow you to have more money for the here and now. So if we had net pay, for example, we got paid £100, we put £20 of that into our pension, we would then be taxed on the £80, leaving us with £64 take home and £20 in our pension. If we were relief at source and we had the same £100, We were taxed 20%, leaving us £80. Then we put £20 into the pension, so now we've got £60 take home rather than 64, but we've got £25 in our pension pot rather than 20. And of course, if you wanted to keep that 20 the same on both ends, then relief at source, you'd only have to put in £16 to get that full £20 in your pension pot. That's why it's important to know what system you're on and to tailor it to your specific needs. You can do that now and you can change it later on. So you may only be contributing a small amount into your pension, but relief at source means that the tax is adding on when you didn't realise it, or you may be contributing less because you're on net pay and you were accounting for the tax relief when actually you've been taking that tax relief this whole time. Remember, you won't get tax relief on any contributions made by your employer, if you're getting any. If you're on net pay, you don't have to claim anything, you're automatically getting tax relief through your wages. And if you're on relief at source, then the pension provider will claim 20% tax relief automatically from the government. So again, you don't need to do anything. However, if you're a higher rate taxpayer or an additional rate taxpayer, you could be leaving thousands on the table, as well as a host of missed opportunities. So check out this video here for more information, or for other pension help, it's this video here.